Good afternoon, this is Tom Aspray with the Viper Report. It's Sunday, November 29th, heading into the last day of the month. Last week was a good one for the stock market, with 2,555 stocks advancing on the NYSE, just 631 declining. New high, new low analysis was pretty strong. 465 new highs, just 28 new lows. That's what you like to see. As I usually do, I like to update you on the technicals. This is one of our standard chart setups. Many of you have probably seen it before, and I'll be going over this. Actually, there'll be a special password-only presentation next Saturday. Details are in the email. But anyway, we have the SPY, which tracks the S&P 500. These green lines are equivalents of the Stark bands. You can see when you get up near those upper band, high risk time to buy, low risk time to sell. Down here, low risk time to buy, high risk time to sell. Chart still looks pretty strong after last week's action. You can see here the S&P 500 AD line. It had broken out. First of all in October, consolidated again in early November, and has been making higher highs and higher lows. A clear uptrend, holding above its moving average. Even stronger is the NYSE stocks only AD line, which has been soaring, making sharply higher highs. That's really a positive technical sign. In today's contribution to Forbes.com, there is a link in the email. I take a look at last week's action. You can see a 3% gain on the NASDAQ 100. Once again, the Russell 3.9, the more value-oriented index, was even stronger. That's sort of the focus in today's analysis. I look at the longer-term picture of growth versus value. Going back to 2000, that was the last major peak when growth peaked and value started bottoming out here. So when this ratio is declining, that means value is stronger than growth, which was the case from 2000 into 2007. Then growth started outperforming, and it's been outperforming ever since. So in today's analysis, I discuss whether it's too early to look for a major top, and given all the fervor and the interest in value stocks, as noted by both professional money managers and investors. Well, it was a holiday shortened week, but we did have a special update for stock traders on Tuesday, November 24th. Updated the indicators I just discussed. Now, I noted how sharply the stocks only AD line had turned higher, and also had a new recommendation. Jinko Solar, symbol JKS, shows a flag or a triangle formation. This is typically a pause after a major uptrend. You can see it had quite a run, and now it's consolidating. So I wanted to buy it on a bit of a pullback. 50% at 66.24 and 50% at 63.66. A risk of about 5.8% with our stop at 61.13. If you look at last week's price data from Yahoo.com, you can see on the 24th we opened at 67.84. High of 72.35, a low of 65.31. So that first buy area was hit. The stock had closed at 67.05 on Monday, and we closed on Tuesday at 67.04. Not much of a change. Different story on Wednesday. Opened sharply lower at 64.51 and traded down to 63.56. That triggered our second buy level at 63.66. But then the stock rallied to close at 68.51 and added pace further on Friday, closing at 72.37, up over 15% for the week. This looks like it has some good potential. Probably first target is in the 78 to 80 area, and that recent high was above 90. One of our profit-taking orders was also filled in ARKG. That's the ARK Genomic Resolution Multi-Sector ETF, with average price down around 67.30. We had an order in from Monday to sell it at 79.33 or better. The high was 79.64. Actually, it opened at 75.60 on Friday, traded up to 79.64, closed strong, but we took over a 13% profit in this in just a few weeks, and we'll let the rest of that position ride. As you can see, the RS, the relative performance, and the OBV both look positive, so it can still go higher if we get a decent pullback, we'll add to that position. So I'm working on Monday's reports, looking for some growth plays here. It's one of the scans I use of stocks in the IBD 50. So some interesting names here that I'll be discussing and making some new recommendations for Monday's trading. It is a full week of economic data. Chicago PMI, impending home on Monday, ISM Manufacturing Index on Tuesday, and construction spending. We get the ADP and employment report on Wednesday. Jobless claims, which should be interesting. Hopefully they have not spiked. Also the ISM Services Index. And then the Big Daddy, the non-farm payrolls on Friday. So it's a very full week. Lots of news to move the markets, and we'll be watching it closely and keeping our subscribers up to date. If you'd like to be a subscriber, you can go to theviperreport.com and click on either the Viper ETF or the Hot Stocks report. You get 2 reports at least a week, and also some 6 trading lessons. By itself, it's about a $49 value, and it's just $34.95 a month. And you're in charge of your subscription. You sign up online via PayPal, and you can cancel if you so desire. But if you try it, we hope you give it a few months to see how we do. Well, that's all I have today. I will try to update you by next weekend at the latest.